What is up, Dividend Nomads? A quick portfolio update for you guys because yesterday I cut a major position from my portfolio and I'm going to share that with you today. I also received a small payment, and also I'm going to take you into the spreadsheet and show you the details of the sale and tell you about some ETFs that really suck. So let's cover all that right now. Really quickly, I'll dive into my phone, share the portfolio with you, and then we'll get into the spreadsheet and cover all the details. Okay, so if we look here, let me record the screen. 3, 2, 1, bam. All right, let's open up Charles Schwab. I'll refresh it for you. It's 7:50 in the morning here in China. So the market is closed, but the post-market is still active for the next 10 minutes. So if it jumps around a little bit, that's what that is. Right now, this portfolio is sitting at its all-time high, and I haven't added any more money to this. It's at $76,423. Yesterday, we were up 0.14%. What's the market look like? The market did a little better than us yesterday. Anyway, I've got $17,170 in cash because I sold a position yesterday and didn't reallocate the cash anywhere. Let's go check out all the positions. XDTE 855, WPay 282, YBTC 106, and HOOW only 18. Now you can see, down here at the cash, SWVXX money market fund, $1 all the time, 4% annual yield. I just parked some cash here, $5,000 there, and then in my actual cash on hand is $12,112. That's from what I made at, because actually this account was at zero. I mean, as far as cash, so I sold $12,000 worth of stock yesterday. So let's go check that out really quick. I'll show you the history real fast. So you can see at the very top here, October 28th, QDTE, I sold $12,000 worth of QDTE, and I sold that at $36.72. So I did make a profit on it. You can see right below that, my HOOW paid me $15.30 for the small amount of shares I had there. But that's not important. What's important is I'm going to take you into the spreadsheet and share with you guys what that sale actually looks like on paper as far as returns go. And I'm also going to share with you some ETFs that really suck. So let's dive in and talk about it in the spreadsheet. 3, 2, 1, bam. All right. So really quickly, I'll just share with you guys so you can see my positions here. They are the same that I just showed you. WPay, HOOW, XCTE, YBTC. You no longer see QDTE here. Here's my number of shares and my cost averages stuff. Really quick, just give you guys an update on the return percentages so you can see all that stuff. Let me get it all on the screen for you. Okay, so WPay, we're at 5% total return. HOOW, 11% total return. XCTE, 9%. And YBTC 28%. Now the only negative position I have on the market return is XCTE. I bought this at all-time highs pre-tariff, and tariffs beat it down. And it's just now recovering. It's been a long ride, but it is recovering. So it does go up. It doesn't have NAV erosion, as people say. It just got hit with the rest of the market, but it did come back. So that's a good sign. Anyway, let's go check out the sold positions here. This is the most important part, but we're talking about today. Sold positions. So you can see at the very, very bottom of the page here, I'll put it there, well, I'll put it at the top. How about that? You have QDTE, and you can see the date was 10/28. Actually, let me fix this. This is kind of weird. I don't know why it's got to go. Anyway, 10/28/2025. I'm just going to make this congruent with the rest of these things. Okay, 10/28/2025. Hey, was the sale date right there in the blue box. Okay, you can see I sold 331 shares, and this stupid thing. See, that's why I don't like these stupid spreadsheets. Okay, average cost per share, $35.23. My sale price was $36.22. And you can see total dividends received for $2,000. Then over here, you can see the market return was a positive 328 and total return was 23 89, which is 2.8% on the market return and 20%, 20.5% on total return. And then if you look up here, you see all this red shit. What is this? This is all Yield Max. Look, Yield Max Ulti. Look, minus $5,000. Yield Max Tesla, minus $496. Coney, minus $12,000. Nvidia YMAG Misty. Look at this, minus 1,400, minus 6,700. This is Yield Max. Now, if you look down here, these are positive on the market return. You can see we've got QQQI, QDTE. So a NEOS fund and a Round Hill fund. Look, Yield Max, Yield Max, Yield Max, all Yield Max. That's all red. Yield Max is garbage, and I would never buy that shit again. But even though my total returns on those were positive, like this is, look, I lost $5,000 in market return. I only made $1,000 in total return, and that was reinvesting 100% of the money. That was no money for myself, no money for my pocket. This one, look, $40. I made $40 after like a year. It just, this one, look, $345, minus 12,000. This is Coney. I was in Coney for a whole year, and I made $345 after a year. I got an HOOW in my small account just like a few weeks ago, and I made $1,000 in 2 days. And this took me a year to make $345, reinvesting 100% of the money. Yield Max is trash, y'all. I'm not gonna tell you what to do, but I'm not buying this stuff with my money. So anyway, you can see these returns are not that great. Total returns up minus 20, minus 24, or market return, minus 20 something percent. Total return, look, this is after like a year in these funds, 4% a whole year. I get that with a bank account. A high yield bank account will give you 4% a year. Look, 2%, 1.23, it's a negative one. This 33% is misty because I got to looking at these positions and seeing what was happening with all the Yield Max stuff, and I seen Misty starting to drop, and I said, no, I'm gonna cut my losses and walk away with this big percent while I can before it ends up like the rest of these. And if I would have held on to Misty, look at the price now, I would be sitting down here at this 3 or 4% because Misty's like, it just collapsed. So luckily, even though everybody was hating on me saying, oh, you should just keep Misty and this and that, no, I'm fine with this 33%, and I'll never buy Yield Max again. And so that's also why I decided against buying blocks, because I was looking at blocks, and blocks is also managed by Jay, the guy who manages the Yield Max stuff. And if Yield Max does this, it's probably a matter of time before blocks does this too. I may be wrong, but that's what I think about it. So I'm happy with the Round Hill stuff. As you can see, my positions right now, WPay, HOOW, XCT, YBC, they're all Round Hill. But I'm not married to this stuff. I don't get emotional when it comes to this stuff, right? If just like I just had QDTE, it's Round Hill, I cut it, right? Not because I think anything bad about it, but I think I can get more bang for my buck somewhere else. And that's why I went ahead and decided to cut it. While it was positive on everything all across the board, I'll just put my money in my pocket and move it to somewhere where I can get more bang for my buck. And right now, I'm looking at that to be WPay. What are my plans for this extra $12,000 in WPay? Well, today, Wednesday, I think we have the rate cut coming, but it could be really good for the market. The market could go up, but at the same time, when you have these type of events, I've seen this for so many years. I've been in the market for a long time. If it does go up, it's going to come back down. You're going to have a lot of volatility and a lot of fluctuations due to these rate cuts. So I do believe I'll get an opportunity to buy WPay. At the same time, the market could tank immediately. And if it does, I'll be looking to buy WPay then, because if it does go down, it's going to go back up, because we're going to see a lot of volatility with these rate cuts and also with all the earnings coming up. You have Apple and let's see, Tesla already reported, Netflix reported. We're going to have Apple, Amazon, Google, a lot of names that are actually in WPay have not reported earnings yet, and they're going to be reporting earnings. and that may cause WPay to be volatile and drop a little bit in price. And if it does, that's when I'll be looking to buy. But I do like WPay more than the single stocks because, like we've seen in the Netflix earnings, Netflix got hammered. Netflix got just destroyed. They were down like 15 or 20%. And if you're holding one of these single stocks ETFs that are leveraged, like HOOW, and they have a bad earnings, I mean, they can drop fast when you're leveraged to the downside, or leveraged upside and downside. But when you're leveraged to the downside, it can drop fast. And so me personally, I would rather not be in it during the earnings in case it does get wrecked. I'd rather protect my capital. So this is something to be aware of. But with WPay, because it has a bunch of names inside of it, it's more diversified and they're all equal weight. So it doesn't really affect WPay that much. Even if somebody gets wrecked, it might have a small effect on it, but not a large effect. But it could still bring the price down a little bit, which will give me a chance to buy, because we're talking about big companies that are actually good companies that probably will go back up, which means when they do, WPay will go back up because it's not capped. It's not going to get held down like XDTE and QDTE did. Now, as far as XDTE goes, I'm not cutting it because it is, a solid workhorse for me. It just steady, eddy, consistent dividends, and it doesn't move around too much, which I like. I like the stability. So anyway, that's what's on my mind. That's what I did. Thought I would share it with you guys since, it's kind of a major thing. And yeah, I'll see you guys on the next video. Y'all take care.